Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm at Lepinkin. In today's video, I'm going to talk about that just a couple of hours after that Jerome Powell said yesterday in the press conference that the banking system is sound and resilient. Another bank shares dropped more than 50% after hours. So yeah, very interesting. The second thing I would like to talk about is let's compare a little bit the 2008 situation to the present situation and talk about this kind of how the economy works. What is this cycle we are in? And the third news is all about that BitMEX former CEO is saying actually that the average person's wealth will be completely destroyed by inflation and what he thinks could be the solution. So guys, all this in today's video. Don't forget, every day I bring you fresh information here on Blockchain Bloom about crypto, blockchain, economy. So if that's important for you, you would like to stay up to date, then simply subscribe button all, and then you will get the notifications as soon as a new video is out. And also hit the like button if you like this kind of content. So let's do it. So as usual, let's start with the market. We can see that actually nothing serious happened after yesterday's announcement that the 25 basis points were announced. Bitcoin is up almost 2% in the last 24 hours. Ethereum just the same. So Ethereum 1,906, Bitcoin 29,167. When we're looking at the top gainers, we have Wu Network 11% up, Complex 8%, and Phantom going up 7%. When we're looking at the losers, then Sui, which was obvious when another layer one is coming out, comes out after straight away it drops, so down 70%. Stacks 3.5% down, and Toncoin about 3%. When we're looking at here the Bitcoin candlestick chart, here you can see the 4-hour one, and you can see that after yesterday's the situation around the meeting, we started to go actually up. So because there's another bank failure in the air, it looks like it could happen. And what these kind of things happening, Bitcoin usually pumps. This is what we can actually see in this year. And let's talk about now the first topic. And the first topic is, just after, a couple of hours after that Powell said that the banking system is sound and resilient, maybe another trouble hit. So yesterday I put up straight away a short video after the news came out that the Fed increased the interest rate by 25 basis points. And in that speech, Powell said that the banking system is actually sound and resilient even after the First Republic failure. And the Fed basically approved its 10th interest rate increase in just little over a year. And it's a very short period of time. And dropped the tentative hint that the current tightening cycle is at the end. Question mark. We will see, because they also said that they haven't discussed the pause on this meeting. This will be for the next one. So we will see what is happening after. But now we have PacWest Bank. Yesterday I already talked about it, that it went down its share quite a lot. But now, just a couple of hours after Powell said that that statement that the banking system is resilient and sound is resilient, PacWest falls more than 50%. After hours on report, bank is considering strategic options. So this is another bank which could face an issue, a problem here. So it's a quite significant drop, what we can see here, and it doesn't look actually too good. Maybe they're going to announce pretty soon that, okay, it's the fourth bank now in the row which will fail. The recent one was, of course, First Republic. That was a biggie. But now maybe this one is going to be the next. So I don't think that the banking system is in a good shape. Is it for a reason? Do they increase the interest rate for a reason that they want small bank to fail and then have more centralized system in bigger banks? This is not what Jerome Powell said actually yesterday, but there's a question mark. Because now let's compare a little bit 2008 situation to the present situation. How different was that, and how serious because of this looks the present situation? So I hope you're not getting confused, but I'm clear it in a second. Okay, so let's move on. First of all, let's see how the whole system, works. Here's a very great picture about it, which shows that, we are here at how the economy works, soft landing. Then, we hit recession. Then we have lower rates. Then the economy becomes weak. Then, of course, we have to do quantitative easing. Because of the quantitative easing, inflation is high again. Then the Fed, to push down inflation, raise rates, and back again, soft landing, recession, and it's on and on and on, because this is how the system works. Okay, and now look at a little bit. I found this here on Twitter, and I've quite liked it. So look, like in 2023, rising rates by the Fed from 2004 and 2006 caused a burst. The housing bubble in 2007, so what they did back in between 2004 and 2006, which then led to the collapse of the Bear Stearns in April 2008, followed by the collapse of Lehman in September 2008, which marked the start of the full-blown GFC. So with 2003, we can see that the timing is already compressed, much shorter time, and then the magnitude of failure is larger. Rates rose in about 11 months before SVB collapsed. And since that time, about 6 weeks ago, more banks have collapsed. The size of the bank failure is just, in the last weeks already eclipses 25 bank failures of the GFC. This is without including, PacWest, I'm just mentioned, and other regional banks, which can face this kind of situation. So if Lehman didn't fail and GFC didn't get fully underway until about 2 years after the Fed stopped hiking rates and, tried reducing them, and 1 year after housing bubble popped, then what is in store in the 1 and 2 year ahead? And this is now the good question. So look, these are here. I would like to zoom in. So as you can see, the Fed rate hike, it was always 25 basis points between 2004 June until 2006 June. So basically in these 2 years, or actually more, and this is a much longer time period, right? Compare what we're having right now. But very, very important that after the rate hike stopped, just in 2008, we saw Lehman Brothers collapsing. And the housing bubble just started in 2007, a year later. And now, we're still doing the rate hikes, as it just happened yesterday, while already banks collapsing. And what size of this? We're talking about more than 500 billion US dollar compared to 2008. Here we have 24 banks with 94 million, and we had the big one, Washington Mutual Bank. This adds up to more than 500 billion. But the 3 banks we have already, but who knows which will be the next, add up more than this amount, than 25 banks. And we still just did the interest rate hike. So if you can see how much this compressed time matters, and if that caused this here, then what's going to happen in the next year or two? So this is something we should definitely think about. Just some information and some brainstorming. Right. Okay. And now the third news is all about what the Big Mac's former CEO is saying, that average person's wealth will be completely destroyed by inflation. So this is scary actually, that because we are like you know average people here, and our wealth could be destroyed, according to him, by the inflation. And he points out that investing in asset outside of the traditional financial system is the only way to preserve one's wealth, according to him. And the majority of people will have their wealth progressively eaten away by the devaluation of money, according to him. However, the amount of crypto assets available relatively small compared to the total amount of debt in the economy, which means that only a few will be able to preserve their capital as the majority sees their wealth destroyed. According to Hayes, the crypto crackdown in the United States reflects the government's attempt to keep the masses within the traditional system by preventing them from fleeing to crypto. So, guys, everybody should do its own homework. Think wisely, but just consider the idea that what is in the traditional financial system, it is totally controlled by them. With CBDCs, the control will be even bigger. So just to have a plan B, it's a great idea. I'm not saying that go, all in this way or that way. No. I'm not saying that. I'm just saying that it's worth to think about it, but you should do it with the responsibility, your own responsibility. Okay, so this is important. But these are just thoughts what I bring here on this channel. You should think about and then do your own research and find your own way. But the situation doesn't look too pretty, to be honest with you. Okay. Well, that's it for today. Don't forget, every day I'm bringing a couple of fresh videos, so there will be short videos coming even today, and these usual longer videos. So if you like these kind of things, hit the like button and definitely subscribe to this YouTube channel to keep you so I can keep you up to date. And yes, I see you in the next video. Have a good one. Bye-bye.